we're looking at something more akin to the Titanic. Just we can't steer it the other direction. We're going at the iceberg, and in the next couple of years, the iceberg's hit, and we've kind of fulfilled this prophecy of a fourth turning crisis moment. And out of that, out of the ashes, we'll build new systems. There'll be new opportunities, but it's not going to be a very pleasant, ride through the Arctic.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. Hello and welcome to Wealthion. I'm Maggie Lake, and joining me to discuss the outlook for 2026 is Brett Rentmeester, founder and managing director of WindRock Wealth Management. Brett, it's so great to have you back on with us.
Nice to see you, Maggie.
So the countdown's on, right? We're in December. We're rounding the corner to 2026. And I think a lot of people use this time to take stock, look at their portfolios, maybe reevaluate their financial goals. What are you telling clients when you're sitting down with them?
Yeah, well, I think you start with the basics. The year end is a rush, and there are always year end things that have to be done, from gifting to, IRA contributions to tax loss selling, those kind of things. And that's where most people's mindset is in this rush period. And then by January, there's kind of a breath and a reawakening and a thinking about bigger picture issues. So we've done all the checking the boxes, and I think, we'd like to explain today, what we're talking to clients about, which is a little bigger picture discussion that we're not just in this normal cycle of everything will get back to normal and, regular volatility. We're closer to what I call kind of a regime change, bigger events happening. And a lot of that has to do with the system we've built. And we'll talk about it more, but a lot of the systems we have in society were built in a different time and a different age. And today they're, breaking at the edges. And one of the core things that's breaking is people's ability to afford what we used to consider basic lifestyle needs. And just to give a perspective on that, a lot of it has to do with your real wage growth, which peaked, by the way, in the 1970s. Since the 1970s, yes, wages have gone up, but the cost of living has gone up more than that. So people are getting more and more behind. And how did they fill that void? Well, they borrowed. And because for the last 40 years, we've been in a falling interest rate environment, they've been able to borrow a greater amounts at lower and lower rates. But we're kind of at a breaking point to that. And so now we're in this period of debt saturation, and a lot of these systems that we used to rely on, I think, failing the average individual. So it's a different prognosis looking forward.
We have to think differently. I think that's it. I think this is a great topic to bring up now, because what I hear from people is this sense of unease. It's just they can't really put their finger on it, but they just feel like they're not optimistic about the future. When you talk to older people, they're worried about something bad happening or like a crisis, but they can't put their finger on it. If you talk to young people, they're afraid they're never going to get a job. Like people are picking up on it, but there's not a lot of vocabulary around it, I think, for the ordinary person. And I think you saw it during the election. People are voting against something. They just want something to be fixed, but we don't really know how it connects to our own money and our own investment. So I think I think it's great you put your finger on that uncertainty. And we hear, by the way, also sort of experts say we can't see the future. Like there's the fog of uncertainty is a phrase I've heard throughout 2025. And I think people were hoping there would be resolution, but you're saying this isn't just a passing phase. Something's changed. So what is happening in your mind? Why are things breaking? Why are we fraying at the edges?
Yeah. Well, to put this in perspective, there's two books I've been recommending for close to 20 years that combined, I think, answer your question of why. Why is this a different path? Or as we might talk about, maybe it's the same path and we just think it's different because we're kind of grow up and taught that we're on a linear path of history, right? And really, I think we're more on a cyclical path in history. Things repeat. As soon as the collective memory of something's gone, we, have the same situation or make the same errors. And so, I'd like to highlight one or two books that I think are really instructive of where we sit. And the
Mm.
first, and I think the most important, is the Fourth Turning, and the newer edition, Fourth Turning, is here by Neil Howe. And this is really a study of Western civilization. And to my point, it's an understanding that we go through these generational cycles, and about every 100 years, which would be right now based on the book, there's a crisis period, so-called a fourth turning, a time where society becomes uprooted,
Mm.
mainly because of a loss of trust in failing systems. And I want to read you just one quote from that book that will frame this. And the author says, sometime before the mid 2030s, America will pass through a great gate in history, commensurate with the American Revolution, the Civil War, and the twin emergencies of the Great Depression and World War II. So we're talking some pretty serious change. Now, not all of it's bad, but it's an uprooting of a system, this debt system that is so saturated that, we're talking about Japan in the news. My
Mm.
gosh, their 10-year interest rates at 2%, small percents by our terms, but enough to blow up their economy. So the whole world is saturated in debt. And I think that's the real issue here.
Uh, yeah, the loss of trust in the system, I think, is gonna resonate with people. Why now? Like, when you read those things like the fourth turning, it
Yeah.
seems like in the distance, that
Yeah.
like we sort of get what they're saying, but then you kind of go about your daily life. Why do you have a sense that we're hitting a tipping point now? What do you see around us that makes you think, oh, wait, maybe we are at this inflection point?
Yeah. I mean, you never know, Maggie. You never know with certainty. Some people thought '08 would have been it.
Mm.
And since then, we've added just tremendous debt. But if I just put some numbers to it, just from a US perspective, not only do we have 38 trillion in official debt, people track, like usdebtclock.org tracks, unofficial debt, which is all these unfunded off balance sheet things. And they come up with a figure over 100 trillion. Okay. Well, how do we manage $100 trillion of obligations? Well, we only take in about 5 trillion a year in tax revenue, but we're paying almost $1 trillion a year now in interest expense, and another almost 2 trillion in deficit. So of the five, maybe three just gets washed off the board right away. And then you've got just the military, the basic things that eat up the rest. So I think it's when you get to a point where a fifth grader can look at the math and just say, like, this just doesn't work. Now, I'm not saying this is the end, but maybe there's one more mass printing of money. But I will say, looking out from the perspective of the younger generation, this kind of system can't just keep ballooning and going another 10x on debt. I think we're at the limits of it. And when will it break? Hard to know. The reason I think 2026 is very important is, Trump basically has until the midterms for radical corrective change on some of these measures. And if not, I think we're looking at something more akin to the Titanic. Just we can't steer it the other direction. We're going at the iceberg, and in the next couple of years, the iceberg's hit, and we've kind of fulfilled this prophecy of a fourth turning crisis moment. And out of the ashes, we'll build new systems. There'll be new opportunities, but it's not going to be a very pleasant, ride through the Arctic.
Yeah. So there's sort of two things I think that people have trouble holding in their mind. We talk about government debt, right? And it's these huge, it almost sounds like funny money. I mean, these huge numbers. And I think when Trump came into office, there was an attempt to fix that, right? Doge was going to cut spending.
Right.
Besson had a 333 plan. We felt like there was an attempt to sort of deal with that. But sometimes that's at odds with the individual struggle. And I think that's where that affordability, that kind of has run into this affordability issue. And we've seen people really focused on that. Even as we're speaking today, there's an election in Tennessee that's going to go down to the wire because a candidate talked about affordability. Why is that so top of mind now? Is this part of the system you see failing? People just unable to
Yeah, I think
afford what they
there's a
were
number of
before?
key systems. I'm sorry, there's a number of key systems failing right now. But there's a
Mm.
bigger story behind why they're failing. And let me just throw that out first, and maybe we'll come back to it. And that is understanding the system we've built. There's another great book. My second recommendation is called The Creature from Jekyll Island. And it's the story of the creation of the Federal Reserve, which is a central bank,
Mm.
and the story of money. And we have hundreds of years of experience being on sound money, or things that have some cost to them, like gold and silver. And so the early days of money were sound money, where if you passed on $100 to a grandchild, that $100 would buy about the same that it did for you. There was a soundness to money. But that changed. We went away from carrying gold and silver coins to taking paper claims on those. And we moved around from paper claims on coins to just paper. And so the insight in this book is that in a fractional reserve banking system, money is lent into existence. It's literally, that's where money comes from. So if I go to the bank to borrow money, I would think, well, they've got Maggie's money. Maybe they're just lending me her money. No, they're just creating it out of thin air and charging you interest on it. It's really the whole system, when you really look at it from the lens of this book, is kind of fraudulent to the core, because it's a debt system that has to just keep expanding. And if I could, just one quick quote from that book that I think will frame this up.
Mm.
Since our money supply is tied to the national debt, to pay off the debt would cause money to disappear. Therefore, as long as the Federal Reserve exists, America must be in debt.
Mm.
So we're talking about a system we set up in 1913 that we're now nearing the end of in some form. And that's the core of all of these problems. Now, there are a lot of critical systems we can go into that are failing, but that is a very important insight that I think a lot of people might miss otherwise.
Right. So money's untethered to anything. It's just,
Untethered to anything.
yeah. So talk to me about, so that we've got a debt problem, but I think it's really important that you highlighted the trust problem. How
That's
does
right.
that come into play here? Because that strikes me as incredibly important right now.
Yeah. Well, psychology and trust is really when things tip, right? You ask, like, well, why now? And I'm not saying it's immediate, but you could have made up arguments the last 30 years why Japan should have broken, or why in '08 things couldn't come back to normal. But as long as people have trust in the system, they're willing to, accept things. And it's when you start seeing trust break that you get more concerned, I think, because it's a psychological shift. And I'd say maybe you're seeing that in some of the elections.
Mm.
I mean, Mundami in New York is a good example.
Mhm.
We're more polarized, and people, especially the younger generation, feels very disenfranchised of these systems.
Yeah. Well, it's hard. It feels like it's hard to get ahead. I mean, speaking personally, I have college age students.
Right.
It's impossible. I mean, it's impossible to figure out how to thread this needle. And we all did it. People did it on salaries. Our parents got us through college, but it feels like that's becoming harder and harder to do.
I think it's a very different world. I mean, I remember when my father went to college, probably in the 50s, 60s, it was you'd work for the summer and pay for college. And then it became, well, you'd work all high school to save up and be able to pay 2/3 your college. Now it's a family literally from before a child's born, putting every dollar they can to try to afford it. And Maggie, when we talk about collapsing systems, let's start with that. Let's start with education just for a moment. The median or the middle income in America is 52,000. So let's keep that in mind as a barometer. And obviously, if you live in a big city, maybe it's more, but just as a baseline, college costs, I was just looking this up, and I've got a daughter in college, so I relate to all of this. It's 12,000 in-state on average. This is just tuition. So forget about them living and food, and 12,000 in-state. That's 23% of the median income would just go to in-state tuition. Out of state, it's closer to 30,000. It's more than half of the median income. And more of the elite private schools are closer to 70,000 tuition. So that's 135% of wages. So that's insurmountable for many people. But
Mm.
it's not just college education. Come down K through 12. We've spent tremendous money as a society. We keep funneling more and more money in, and we get poorer and poorer results. And I can only speak to the Chicago area where I am, but the public schools here, the data I just looked at over the last decade or 20 years, we've had a 50% increase in administrators relative to an 8% increase in teachers. So we're creating more of a bloated administrative system, and yet only 18% of kids in the Chicago public schools are at sufficient math literacy. Now, some people feel like, yeah, but I'm not paying for public schools, but you are. The real estate taxes in all these metro areas keep going straight up. So, it's not just worrying about college. It's, worrying about your real estate tax bill, doubling every 3 years because of all these demands. So, and that's just the beginning, right? Education is for a lot of people still down the road for kids or grandkids, but it's a very real cost.
Yeah, and not to mention the national cost of having students that can't do the basic skills of, what a society needs from a modern workforce. I know a lot of I mean, this is interesting because, I mean, and just to bring it back, well, people will say, well, everyone's situation is different, and if you have assets, you may feel like you're slightly buffered from some of these concerns. Maybe you don't feel like you are the median income, but again, it's sort of eroding the trust in everything that you're talking
It
about, and
is.
that affects us all. Like, we're not living on an island, right? So if everyone else is getting sort of sucked down, this is where the K economy really matters, right?
It
If
is.
that
And I'd
lower
say, Maggie, look at everything from the perspective of a 25-year-old 2 years into their career.
Yeah.
Back to assets. Average home, and it can vary obviously hugely by area, but the average, or I'm sorry, the median, the middle price in America, 407,000 for a starter home. It's 8 times a median salary, right? A new car, average cost, exactly the median salary, $52,000. So just to get a car is basically your whole salary. And that's before you pay tax, et cetera. And then, of course, if people have children, there's 12,000 a year per child on average for childcare costs. Where you are in New York, it's probably double, triple, maybe
Yeah.
quadruple that. I don't even know.
If you're looking for a simple, secure way to invest and own physical gold and silver, visit our sister company, Hard Assets Alliance, at hardassetsalliance.com. That's hardassetsalliance.com. I mean, you see people not forming households because they are concerned about just really managing. Medical is another thing. I think that I'm sure you have this come up all the time because no one's immune from that, right? The medical bills.
No one's
So
immune. Yeah.
yeah, I feel like it is important though, because it is creating this collective feeling that the system is failing. And so you think this will produce sort of radical change. It sounds like it's going to it sounds like a pressure cooker
I
that
think
you're
it
describing.
is. I mean, take medical. You just brought it up. We're a small business, got our renewal rates. I'm in my early 50s. Family of four is almost $40,000 a year. It just so again, put this back to the median income earner, and maybe there's some tax breaks for them and other things. But okay, 40,000 a year. But then you've got deductibles and all these things. You've got doctors not taking on some Medicare patients, and quite honestly, I've lost a lot of faith in the medical system. I mean, it's clear it's a disease management system. It's not
Mm,
healthcare, and it's certainly not wellness. So we just pay more and more in every year for worse and worse results. I just don't know how much further that can go. Maybe I'll be surprised, but could we be sitting here in 4 years and you tell me it's $100,000 a year for a family of four for basic medical care? I would say at some point, again, just based on math and looking at these proportions of what people can earn versus what the basic cost of life requires, it seems like we're very close to a point of at least loss of faith. I don't know if it's going to collapse just yet, but
yeah,
loss of faith. And the key question, can we bring radical change and rethinking without hitting the iceberg first? And I
yeah.
don't know the answer to that.
But from an investment point of view, this is incredibly important because now you're talking about going into a period where we're not just dealing with the sort of normal uncertainties, because there's always uncertainty when you're investing. The sort of normal uncertainties, we're talking about much bigger, much more potential radical change. So how do you think about that through an investment lens? I mean, does this mean that uh volatility is here to stay? How are you thinking about this, and what are you saying to clients who are coming to you saying like, it feels like I'm worried about the future. It feels like I can't, things are changing, the sand's changing underneath me. What are you telling them?
Yeah. Well, let's acknowledge that you have to, our tagline recently has been you have to have 1 foot in the old system and 1 foot out. 1 foot in the old system
Mm,
because we're not here yet on some of these issues. But anybody looking at the data and mapping it out should have a level of concern. So there's embedded caution in all of this. but you've got to be dynamic. It doesn't mean don't take risk. It might mean that some of the things we used to think were safe are no longer safe. Maybe bonds issued by certain state municipalities. Maybe at some point the treasury bond. A lot has to go
Mhm.
wrong to get there, but obligations, third-party promises to pay feel a lot less certain in this world than, say, owning precious metals or something tangible and physical that can't just be printed into thin air. So I think there's a skew towards hard assets. There's a skew towards worrying about downside risk. And there's an acknowledgement that we have to be very dynamic in what's probably, as you said, going to be a very volatile period of ups and downs and, one step forward, two steps back. There's a lot of
Mm.
change that could be positive. The Elon Musk view of the world of AI plus robotics 10 years from now might give us everything we need. That's
Mm.
possible.
Do you Yeah. I mean, and it's good to lean into we could all just sort of hide under our blankets because it seems like sort of almost too much big change. Change is scary, but, what are some of the sort of innovations or radical changes? I mean, you don't have a crystal ball, you can't predict that, but what are some of the things that you're thinking about that might be changing that we should be aware of?
Well, let's start with the most important, and that is my read of all of this over all the years I've been thinking about this is that the core is rotten. The money system that we set up in 1913 is near its last gasp. Now, last gasp in 2026, last gasp by the mid 2030s, hard to know, but you can see the writing on the wall where there's more of a trade-off now. When Japan prints more money, interest rates are going up or the yen's going down. So you're seeing the trade-off where in the past, countries just got away with kind of this lazy, let's just print trillions of dollars and, with seemingly no inflation. I think we're near the end of that. So I really think the key to this is coming back to sound money. And I think there's two ways you get there. First is a more proactive way, which I see the administration making some progress towards, which would be things like, hey, maybe the banks shouldn't control all money creation. Maybe we should have stable coins and any company can kind of issue money. And we decentralize money creation. And Apple can have an Apple stable coin or Meta or Amazon, whomever, and that will be backed in US Treasuries. So something akin to that, might be part of the solution. I think ultimately a more radical view would be the Fed system's not working. We can either wait until it blows sky high, or we can like corner it off as a bad bank, let it sink, get rid of kind of the old school central banking where we just keep printing worthless money and return to something where maybe the treasury takes over the creation of currency. And maybe it is backed by tangible things, gold, silver, it could even be Bitcoin. And we let those assets revalue to their true potential. So maybe at a certain price point, we know that if we have enough gold, silver, or Bitcoin, if they revalue up enough, that might pay off or some or all of the debt. I mean, it's not an inconceivable notion. So can we return to a path like that? If we don't do that, Maggie, what I expect is a choppy world where we have a couple crisis moments and they come in again. And this time it's tens of trillions of dollars that just get created out of nothing. And maybe there's one more sugar high, but ultimately it's a path to nowhere. So I
It's
think that
also sounds like a
that's the
very
fork in the road.
it sounds like a very inflationary path.
I think it could be. I mean, I think if they can be proactive and return more to a sound money principles, and they've hinted at it, right? I mean, they've hinted at, hey, how much gold's in Fort Knox? They've
Mhm.
hinted at Bitcoin reserves. A lot of these things they've talked about, but is there a real plan that can come together to put this in play and be proactive before you just end up in a predicament like you're saying? Now, keep in mind, reading some of these books on history that I mentioned, this country around the Revolutionary War had a currency called the Continental that we're never really taught about this in school. At least I wasn't. Money, how money works, that is lent into existence, or that we had a currency called the Continental and it basically hyperinflated. So it wasn't
Mm.
just inflation, it was inflation to a point of losing faith that the paper had any meaning to it. And so we've had that on American soil. Now, people will say, yeah, it's a different time and that can't happen again. But the reality is, those are the worries. And I see more smart people wondering, well, what does protect you in those kind of environments? And I think they come back to hard assets as a general, core concept.
Well, certainly we saw silver just hit an all-time high. We know gold has had a huge run. So, you can see some of that, I think, concern reflected in some of the prices of hard assets. And when I ask you about Bitcoin, because you mentioned that, because I felt like we had so many conversations about that, and it felt like we had sort of entered a new chapter for cryptocurrencies generally. We were talking about a change in environment in Washington, as you said, murmurs about a Bitcoin reserve. And then we've seen this huge decline over the last 3 months, lots of wealth wiped out again,
Right.
and a big owner of Bitcoin and from an OG from the early days unloading billions of dollars worth, the big whale. And
Yeah.
that has a lot of people concerned again. Does that worry you? Does it feel like this is just part of a cycle of something that is still volatile? Does it rule it out as something that can be used as you just discussed?
Well, I think one thing we've been talking about, including our interviews this fall, is that one, until proven otherwise, crypto is still a risk asset and gets a speculative nature to it. So it's volatile. And people that haven't been through past cycles see it crash and think it's dead. And then a couple years by, they wish they had stuck in it. The other thing we talked about is despite all these positives, we're ending this fall the 4-year cycle timing, which normally is a danger zone for cryptocurrencies. So it's kind of followed that pattern thus far, but it is not atypical for Bitcoin to correct 35, 40, 50%. And here we sit. So I think one of the problems here on a lot of the things we're talking about is there are plans, there are legislation, and maybe a reserve and all these things, but they're not enacted yet. The
Mm,
Genius Act, the Clarity Act, all these things haven't happened yet. So we're kind of in this gap. We had like the hype, excitement over the change in regime as it relates to crypto. And we've got the promise of once this is in law and we're letting, Wall Street and banks and other companies get involved, that's a promising future. But we're in this gray zone right now where that hasn't happened yet. And
mm.
I think that's part of the volatility. I think we are on a path to all of that happening. So I think there's reason to continue to think of it the same way we've thought of it, investing these last 12 years in it. But you have to do it the right way. You've got to, be in a system that understands when to take profit and not get greedy at
Mm.
points like we've been in this fall. Take some chips off potentially.
Yeah. What about taxes? Because we'll talk to people in this sort of changing regime as we deal with, and maybe it's the transition part as we deal with these high debt levels and a government that can't meet them. There is a lot of talk that we could be seeing drastically higher taxes. Is
Yeah.
that something we need to worry about, or is this an area where maybe things get innovative in a way that we can't see right now?
For taxes, I mean, I don't think you can tax yourself to greatness. I think I've mentioned this quote before. I had a client that worked with many Fortune 500 companies, and he always said, "You can't cost cut yourself to greatness. Like eventually, you need revenue growth. You can't just
Mhm.
cut cost and go to the bone." And I'd say, in similar vein, you can't just keep taxing the productive capital and just keep spending. I think if people felt like we were doing spending efficiently and the system was just running, great, we'd feel different. But we've talked about medicine, we've talked about higher education, we've talked about, all these systems. And I don't think anybody I talk to feels like we're being, frugal and thoughtful about every dollar spent. It's just, I feel like it's going out in every direction, but to the benefit of the local people in the community. So one of the other provocative ideas would be, why do we need the IRS? We're taxing people, but we can print money. You end up in the same place, kind of. But I would not be shocked if somewhere down the road, this is just my own personal view, you end up with a system that's maybe tariffs plus a consumption tax or a sales tax, and you simplify the whole thing. Now, it's still tax. I
Mm.
think the Trump administration looks back to this era of the late 1800s when we just had a tariff system and that supported all of our needs. And that's a great vision, but we've now got this massive welfare state built on top of it. So you can't support that with the tariff system, at least not the way it's operating today. So I don't know, maybe there's something in between, but I think the idea that we can just keep taxing to prosperity is a broken thought. We've got to rethink the whole system. And I think it comes down to thinking about how we're spending money, right? Because you're taking money from people that have a lot of them have no safety net, right? Pensions are gone. Social Security, we've known, has been a pyramid scheme for years, for 40 years. It's based on, workers supporting a retiree. So there's 2.7 workers per retiree now, but the demographics are we're aging, and people aren't having as many children, so that whole pyramid of support is breaking down. So I think it's a losing proposition to become a high tax jurisdiction. I think the people that are going to win are people like Dubai, who have come up with investor friendly tax policies that are, and you see it in the US too, Maggie, going outside of federal tax. Where are people moving? Yes, they're moving where there's jobs, probably sunshine over cold, but they want to go somewhere where there's freedom. And more importantly, maybe than anything, they prefer to be somewhere where taxes are low or even 0% compared to, New York, LA, Chicago.
Hmm. Yeah, I'm the only person who's staying cold. You can't win me with the sunshine. So we're in the midst of all this change, which is coming. I mean, that's what I hear you saying. It's coming. How we resolve it remains to be seen, but this change is coming and systems will change. You need to be dynamic. You need to definitely lean into hard assets to protect against some of the inflationary issues and money problems that you see. What about equities? Because this is where most Americans have a bulk of their portfolio right
That's
now.
right.
If you have been invested, and I hear people talk about rebalancing, you're probably overweight equities more than anything else because we've had a tremendous bull run. How do we think about that? Are we still in equities? Is an important part of a portfolio, but you just have to really watch where you're dedicating your money. How do equities fit into the picture?
Yeah, a core part of portfolio, but you have to be very mindful of calculated risks. There are a lot of areas that we think are undervalued in a market like this. Obviously, the AI stuff has been driving the market by every measure. It's what's pushing valuations up. It's the
Mm.
top 10 companies are almost 40% of the S&P 500. I mean, you're getting these distortions, yet there are some AI companies we think are worth considering, but we're not chasing it. And I think for the average American that's not watching their portfolio, their equities have drifted much too high. 25 years ago, we probably would have recommended rebalancing and putting it in bonds. Today, bonds are part of the problem. I don't think they're going south immediately, but there's very little of an attractive payoff, risk reward as you look out the next decade. So I think broadening a perspective to include hard assets, some unique private investments, and just things that don't correlate as closely to the stock market. Because yes, we probably will keep printing money. That might push the market up more. On the other hand, we all lived through '08, or like you brought up with crypto. Yeah, everybody thinks it's going up, 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 and boom, 50% correction. So these things do happen, and I think will continue to happen in this kind of regime where it's all about, is money supply expanding, right? Is there more money being printed? That's what the market wants. But the irony about what we talked about is that is the root of the problem, because money, we can't pay down the debt, or we shrink the money supply. We shrink the money supply, and all the kind of lubrication in the engine goes away and things break down. So unless you have a wholesale rethinking of the system, and I don't know if they'll be able to pull it off. Sometimes the populace is not in it until it's at a pain point. So are we at a pain point? I think for the 20-somes we are. I don't know about the rest of the population yet.
Yeah, I think we're going to find out in those midterms, Brett. Really
Absolutely.
fantastic stuff. Thank you for sort of pulling the lens up, because I think this is really important stuff for us all to think about as we look at our investments, and especially as we turn the corner into the new year. I think 2026 is going to be something that's really volatile. So fantastic overlay for us. Thank you so much.
Thank you, Maggie.
As always, if you would like to look, I think we need to look at our portfolios, but if you would like to do so as you turn the corner on the year and you want some help, you can get a free portfolio review from a member of the team at WindRock. Just go to the description in the link, or you can go to wealthion.com/free. Thanks so much for watching, everyone. We'll see you again next time.